Hello everybody, welcome back to another episode of the Investor Motivation Podcast. You have got Amy Lehman and Mr. Robert Gowdy today. And what are we talking about today, Robert?
Today we're talking about selling a business, selling a farm, or any type of business really. This is something that I wrote a whole heap of years ago when I was on holiday. While the teenage kids were sleeping, I was writing, and I really enjoyed putting it together. So
pre-ChatGPT, you wrote an ebook.
Yeah, there's a few out there, but this was well prior to that. It would probably be 8 years ago that I wrote that. So that ChatGPT wasn't even a thing back then.
True
but
passion.
So it was based around farming businesses, and that's because we live in a farming community. It's broadacre, wheat, canola, and all the rest. So definitely, but it is business in general. So we'll talk as generic as possible. But I thought it was a good topic today because I just spent an hour at the accountant's office with our mutual clients, nutting out the small business capital gains, and then discussions about where does money go afterwards. So these people, their business were farmers.
Yeah.
And obviously when the money is in the land, the ground, that's all they've known, was mum and dad's business, and now they've owned the land for X amount of years.
Yeah.
The questions around, well, what do we do with it? This was as stressful for them as the actual transaction.
Yeah.
Yeah. So what do we do with the money? So I suppose.
And was their farmland owned in personal names or the business?
Well,
farming enterprise.
yeah, this, I suppose, from a farmer's point of view, and this can happen with any sort of assets that that are used in a business. In this scenario, there was 4 titles.
Yeah.
3 were gifted down to the son from the father, and then the 4th title was purchased by our clients in joint names.
Yep.
So different ownership times, the order and sequence of when things were sold was really important.
Yep.
And in this scenario, one title's been share farmed, which means they're still farming, and 3 titles were a pure passive lease.
Yeah.
So the order in which we did things was just so important with this scenario, and this can be the case with any type of business. And assessing when things were purchased, the timing, whether you're retiring as part of the sale. Yep. Or just moving on. So there's the small business capital gains exemption, which we've definitely had conversations about. But so I was keen just to brush over some of this complex stuff, because you get one chance, and I use this terminology whether it's a farm or any business, you get one chance to sell the farm.
Yep.
You only get one shot at it, so you need to get it right. So there is a whole heap of topics that we covered off that. At what point would you consider selling a business? You're a business owner, Amy. You've been a business owner here for 2 or 3 years now.
Yep.
Why would people choose to sell a business?
Well, predominantly it is that you want to retire out of that business or out of the farm, and if there isn't in farming families that succession plan where you just want to pass that down to the next generation.
Yep.
That's when it is really, you want to start selling the farm. Nobody else is going to look after it, take over. And if inflated prices are around, like they definitely are in our area, it's a great opportunity to consider. Yeah,
fantastic. And the work that we've been doing with these clients is that they've had enough of farming. Yep. They understand that asset prices have gone through the roof, like all assets globally are expensive at the moment and all-time highs. Same for farming land. They've seen this as an opportunity, but we've spent probably 4 months on making sure we get the capital gains tax right. Yes. And the small business CGT concessions, which, this is where you need the accountant who specialises in this space for the complex stuff.
Yep. And would you say that how far in advance or any time in advance should someone go see their accountant or financial planner when starting to think about this? Yeah,
I'd be a year or 2 in advance, starting to get your head around it and starting to understand what it's going to look like.
Yep.
If you're going in after the fact, sometimes
it's a bit late.
It's a bit late. You want to do your planning with your accountant, with your financial advisor, so you know how how could tax be avoided? So
Yep.
in this scenario, if they got the order wrong, in these 4 blocks, if they got the order wrong, there would have been tax of just under 1.8 million.
Massive.
And getting the order right, which we confirmed this morning, which was really a huge relief for them, they'll pay no tax
It's huge.
on 3 of those big blocks that they've had for over 15 years, ran it as an active asset for the business for 15 years or more.
Yep.
So they can use the retirement exemption, which they need to retire from. So we better not get bogged down in small business capital gains exemption, other than you need to get appropriately qualified advice.
Yes.
It is complex.
And that's a specialised tax agent.
Correct. Yep, many of our local accountants know it very well, but when it gets complex, they then reach out to specialists in that field further again. Yeah, so depends on the complexity of everything. So selling a business might be just pure retirement, and or asset values are perfect.
Through the roof, take advantage.
You get an amazing offer and away you go.
Yeah.
Yep. Fantastic.
And that might be, that you do go through the listing process with real estate agents,
Yep.
or that, the person leasing the farm is now at a position that they want to be able to purchase that outright.
Yep.
Maybe a neighbour. There's always different people, thinking about that stuff.
And that was a discussion we had this morning about, well, how do we go about it, knowing that my client's very well aware of, that they could be charged, on a monster amount of money. We're talking about, 10 mil or a bit more.
This is through a real estate agent?
Yeah, that
Yep.
could cost, $100,000 to $200,000.
Yeah.
There is no set amount.
Generally it's the percentage amount.
Yeah, so it could be just a monstrous number. But they've got people that are helping them, leasing or share farming at the moment. These are people they've known their whole life. And for people that are running a business like we are, and this is where quite often it's the people internally that will be your potential buyers.
Yeah.
And I think there's one thing that's come up recently, that if you've got a potential buyer and you're going to act as the bank, vendor finance, which means you leave money in there to help the next generation of business owners come through.
Yeah.
Capital gains tax, if it's applicable to you, will need to be paid in that year. So you may not get all the money because it's paid out to you over, 2, 3 or 5 years.
Yeah.
Capital gains tax will be applied from, based on the settlement.
So it's making sure you do have the cash available to pay that.
That's right. So
Don't leave too much in.
yeah, so that is, and my advice to people that are looking to sell is that you don't play banker.
The cleaner, the better.
Cleaner the better.
Yeah,
There's
agreed.
generally no huge advantage in you being vendor finance,
Yeah.
and banks are used to doing that.
Yeah. And another note on, if you do think that you may know the potential buyer and you're going through a real estate agent, you can still barter with that agent on their fees, especially when you do have potential buyers lined up.
Yep,
So don't be afraid to
absolutely.
have a negotiation there.
So I think, understanding how to handle, I suppose all the assets that you are selling, physical assets, which, what we're looking at here, we've got microphone, we've got computers, we've got stuff that we run our business. This is a capital light business. We work hopefully on our intelligence and our advice that we provide people. But in a world of trucks and headers and
Sheds
sheds
land.
correct, that there is, some of them are quite capital heavy, but if you've got a depreciation schedule, which we do, and this would be on that.
Picking up microphone.
Yeah, picking up the microphone, that when that sells, that's more than, this microphone that we're using would be depreciated down in year one. It's a $200 device. So they'll be depreciated down. I sell this to Amy as the new buyer, and she pays me $100, and I've claimed it's a depreciating asset over the time. That $100 that Amy gives me will be taxable income. So there is the tax on the way out, which is separate to capital gains tax.
Yes.
Yep.
Yeah.
Now, I think it's worth, what on earth do we do with the money that, obviously, from a sale of an asset, of a large asset that for some people it's taken not just years but decades and generations to build.
Yeah, and it's I think people struggle, well, don't even know where to start with this, because generally you own the asset in your own name or jointly with
Yep.
your partner, and then it's, just an asset that kind of, has its own yield if you're leasing it out, its own little passive income, and then you go to sell it as cash. What's one individual to do with that amount of cash? And then it's structures is when you can start thinking about
Yep, that's your
how to house it.
Yep. The structures is the first point of call for us. And I suppose, Amy, I'll get you to explain some of the structural options that we've got to invest into.
Yep, so you've got
What would
the
be,
most simple one is
Yeah.
the individual.
right, from a tax, if we work from most attractive tax point of view,
Attractive tax.
and these are retiring people, yeah, what would be our first option,
Well,
first priority?
Family trust.
Family trust? Super?
Yeah. If we're talking about, well, that's, I guess, when you do the retirement exemptions, you do need to put that into super most of the time.
Yes.
So that amount, yes, goes into super, but if it can't go into super, because you're right, that is the number one choice when you go to pension phase, up to $2 million tax-free environment. You can't get a better tax environment than that.
Yep.
So yes, maximise super.
That's right, super. Yep.
And then you're looking at family trusts generally.
Yeah. So family trust. Now, if the amount of money that we can't get into super, obviously there's limits, and
Yes.
you, with the sale of a farm, and particularly using the 15-year exemption, you can get in $1.865 million in one hit. You've got to be retiring to do that. So
Great
you can
amount
get
of
big
money.
lump sums in, but let's say the amount, we're talking about a husband and wife, a partnership there. There is $800,000 left. Family trust, or would you keep it simpler?
It would depend on, I suppose, their personal income as well. If there's no more income generated
Yep.
in their individual names, 800,000, you probably could split.
Just go jointly held.
Jointly.
Yeah.
So then any income generated by that 800,000 is just split 50-50. It wouldn't cause too much of a tax issue.
Sure. Yep.
Yeah.
That is perfect. And it really gets down to, as Amy said, if someone's still working and we're putting other income on top of that, this is where, the amount of income that the assets will generate will really determine whether family trust is appropriate. And then if you go for the family trust, that's where we've got the ability to distribute income to lots of different beneficiaries.
Yes.
and future capital gains as well.
Yeah.
Yep, fantastic. And obviously, where to invest. Obviously, that's the structural side of it. But
how
then,
to win.
correct. Now, this is where I think we spend a significant amount of time educating our clients where to be and where not to be.
Yeah. So that is a very much longer process of education and understanding different asset classes and returns, your time frame of investment as well.
Yep.
Generally, it is long term. People receive this amazing amount of money and want to have it invested for the long term, even longer than their lifetime. So
Yep.
that's the more legacy piece, passing on to future generations. So that's long term growth assets generally, but
Yep.
keeping that conservative amount. Now that you're retired, you need some income coming in to fund your lives as well.
Yeah, and Amy and I have worked on a calculator that's helped, for particularly our self-managed super fund clients to understand how many years worth of conservative assets of income they've got ahead of them. And we want to make sure that whilst we invest for growth, we know that share markets, the businesses we buy via the share markets will always be volatile.
Yes.
We want to make sure we're never in a position where we have to sell to fund the income at a time when markets are doing their backflips.
And when they're not so favourable.
Yeah. That's probably the worst scenario for me, where we've got to sell assets at a time when markets are down.
Yeah.
And that's why for some of our clients in recent times, we have been progressively doing a bit of sell down, taking a bit of cream off the top.
When markets are high.
Yeah. And that's what we've been doing over the last 12 months.
Yeah.
Yeah. Very good. So probably to wind this one up, you need to make sure you get great tax advice
Yes.
Yep.
First and foremost, and well in advance.
well in advance. Get in there up to 2 years out. You might think, that's too early, but it takes away the stress of the unknown, the uncertainty about what it will look like.
Yeah. And it really allows you to time the contributions into super as well. You get your retirement exemptions in capital gains tax exemptions in.
Yep.
You've also got your non-concessionals that you may be able to use, as well as concessionals.
Yep.
So
Fantastic.
staggering that over the financial years is
Yeah.
fun.
Fantastic. Very good. Look, obviously, that is a brief chat on what is a really broad topic.
Yeah, and if anyone does want to read Rob's ebook, you can get that from Consortium Private Wealth online in our resources section.
Yep. Downloadable there, but I think I've
Yeah.
also done, I think there's 9 topics in there, and I've done a separate video for each.
Yep, perfect.
So for those that don't want to read, then you can also, and that's a photo from young Bailey, one of my son's mates.
The cover of the ebook.
Yeah. For those that don't want to read, watch the videos, but all that is there. No sign-ups required. Just download and watch at will. Thanks, Amy.
Thank you, Robert.
People can find you on TikTok and Instagram and LinkedIn and all the fun stuff.
Yep, Amy Lehman, FA, no spaces, no full stops.
Cool. Watch
Don't
out.
get scammed.
Watch out for fakes. Amy or I will never direct message you
Or ask
out
for
of
money.
the blue. You are allowed to direct message us if you have questions, but we will never do that to you, and that's probably the thing you need to know, that we will never do that, which means if anyone does, that is Amy or me, you know it's not us.
Yeah.
You'll know it's a scam straight off the bat. Thanks for listening. If you do have a topic you'd love us to cover, we are happy to do that, so please let us know in the comments. Cheers.
Bye.
See ya.